Okay, so let's get this clear first. It's not time to panic, not time to worry too much, but one of the nation's hottest apartment markets is starting to see things cool off a bit. Washington, D.C.'s apartment sector has seen revenues actually fall a little bit in the past 2 quarters. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Washington, D.C. update. The apartment sector in Washington, D.C. was one of the least affected during the recession and one of the first to show significant revenue growth coming out of the recession. And that made it one of the hottest markets among investors and developers. But after significant growth between early 2009 and the middle of 2010, things have just stalled out a little bit. So let's take a look at some of these apartment demand numbers. You can see a clear trend from 2008 and 2009 when most of the country was struggling with net move-outs. D.C. really only had 2 quarters of net move-outs, and for the most part, demand was pretty strong, and then it just exploded in the first 3 quarters of 2010. But look at what happened in these past 2 quarters, net move-outs. Not a lot, just over 2,300 or so vacated on net in those 6 months. So not so much as to raise concern, but undoubtedly the growth has just stopped. And take a look at this occupancy chart. Occupancy shot up from 93.7% in early 2009 to 96% by 3Q 2010. But since then, it's fallen 0.9 points to an overall rate of 95.1%. Still strong, but trending in the wrong direction. And how about rents? Well, after seeing big quarterly rent growth in the first 3 quarters of 2010, just not much improvement since then. But because of the earlier increases, same-store rents did climb 5.3% year over year, and that easily tops the national norm of 3.3%. And this is an interesting trend because we are seeing this little bit of a slowdown all across the metro. No real worrisome spots among the submarkets or among the product age groups. Generally, occupancy rates are strong all across the area, and we saw same-store rent growth on an annual basis of 3 to 8% in every submarket, and also in the product age groups as well. So it's not that any particular areas of concern, it's just that we're just seeing a general slowdown all across the area. So what's going on in Washington, D.C.? Well, it's hard to pinpoint one particular thing, but if we have to find one, it could be employment issues. The Bureau of Labor Statistics initially reported 57,000 jobs gained in 2010. Then they revised those numbers down to 25,000. And now they're saying we've had more big growth in the first 2 months of 2011. And so it's hard to really tell what's going on in this employment market. So that could be one factor. Now, going forward, we do expect D.C. won't have much problem continuing to generate jobs, and we aren't too concerned yet about these past 2 quarters. We're expecting significant revenue growth for D.C.'s apartment market in the next 12 months, and that forecast really banks on some big numbers in 2011's second and third quarters. So that's what we'll be watching for Washington, D.C. And that wraps us up for today. Until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thanks for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.